Good morning and welcome to Economy and Markets on BDTV, where we give you a comprehensive insight on happenings in the economy as well as the market. So we start off with some of the headlines that are dominating the business space today. We're starting with Nigeria's crude output for August falling below OPEC quota after 2 months. Nigeria's crude oil production slipped below its OPEC quota in August, breaking a 2-month streak of meeting targets and reigniting concerns over output stability. Data from OPEC, based on direct communication, showed that Nigeria pumped an average of 1.43 million barrels per day in August, compared to 1.507 million barrels per day in July. This figure represents Nigeria's lowest output in 6 months, and it falls short of Nigeria's allocation of 1.5 million barrels per day. The setback comes after encouraging gains in June and July, when production edged closer to OPEC's agreed quota following prolonged underperformance. Analysts attribute the renewed dip to crude theft, pipeline vandalism, and technical issues at key oil terminals. These challenges highlight persistent structural weaknesses undermining Nigeria's oil sector. Industry experts warn that the decline could strain revenue expectations, as crude oil accounts for over 80% of Nigeria's export earnings, with the 2025 budget heavily dependent on oil receipts. NNPC has pledged to raise oil output by 1.7 million barrels by the end of 2025. The state oil firm is banking on tighter security in the Niger Delta and renewed upstream investments, although observers stress that this target hinges on sustained reforms and infrastructure upgrades. Then we move on to the news where we move on to yesterday's market data. We see that Guinness, C&I Leasing, eTransact, others, they push the stock market by 0.21% gain. The NGX sustained its bullish run on Thursday, closing positive for the fourth straight session, as major gainers like Guinness, C&I Leasing, and eTransact lifted market sentiment. The market benchmark, which is the all-share index, advanced by 0.21%, while equities market capitalization rose to 89 trillion naira from the previous day 88.8 trillion naira. The all-share index has now crossed the 140,000 point mark again, as a reinforcement of the market's upward momentum. There was robust trading activities with over 22,000 deals executed, as investors exchanged 378 million shares valued at 12.4 billion naira. The top traded equities of the day were Japan Gold, Zenith Bank, UBA, Access Holdings, and Nigerian Breweries, reflecting sustained interest across both financial and consumer goods counters. Analysts note that improved investor appetite in bellwether stock contributed to the session's positive close. Guinness Nigeria led the day, rising from 130 naira to 143 naira, which is a 10% gain. C&I also gained 10%, moving from 6 naira to 6 naira 60 kobo, while eTransact advanced from 12 naira 40 kobo to 13 naira 60 kobo. Then move on to AIICO Insurance, that is forecasting a 19.5 billion naira profit after tax for the full year 2025. The insurance company projected a profit after tax for the full year, profit after tax of 19.5 billion for the full year ending December 2025, according to a filing on the NGX that was signed by its managing director and CFO. The company's track record of surpassing projections strengthens expectations that could once again beat estimates. In Q1, AIICO projected 2.4 billion with an EPS of 7 kobo, but delivered 4.6 billion with an EPS of 13 kobo, while its H1 estimate of 7.3 billion was exceeded with 11.2 billion naira and an EPS of 31 kobo. For the 9 months ending September, it projects an EPS of 14 billion, projects a net income of 14 billion with an EPS of 38 kobo. Insurance revenue growth has been strong in that company. It rose by 45% in the first quarter of the year to 32.8 billion on the back of higher gross written premium of 54.8 billion. By the first half of the year, premium advanced by 17% to 102 billion, with insurance revenue up by 65 billion compared to 2024. H1. Despite higher service and reinsurance expenses, insurance service results expanded sharply. The company's net investment income also supported profitability. It rose by 68% in Q1 to 12.9 billion and 54% in H1 to 27.9 billion before fair value charges. After costs, net insurance and investment results stood at 8 billion in Q1 and 18.7 billion in H1. To achieve its full year forecast, AIICO will need to strengthen efficiency, reduce operational costs, and manage insurance expenses carefully to sustain profitability. They'll move on to Wema Bank that has surpassed the CBN's capital requirement with a successful 150 billion rights issue. Wema Bank has surpassed the CBN's capital requirement for national banks of 200 billion following the successful completion of its 150 billion rights issue. With the completion, the bank's total qualifying capital now stands at 214.7 billion, comfortably above the mandated 200 billion threshold, ahead of the March 2026 deadline under the CBN's recapitalization framework. The rights issues, which opened on April 14 and closed on May 21, reflect Wema Bank's proactive approach to regulatory compliance and long-term stability. In addition to the rights issue, the bank concluded a 50 billion special placement which is awaiting regulatory approval, further reinforcing its capital strength. Commenting on the milestone, the Managing Director and CEO Moruf Hussaini described the recapitalization as a welcome mission, noting that surpassing the 200 billion benchmark underscores the trust between Wema Bank and its shareholders. Earlier in May, the shareholders approved the additional private placement at the bank's annual general meeting, signaling support for its growth agenda. Under the CBN's recapitalization framework, commercial banks with international authorization must hold 500 billion, while national banks require 200 billion. Wema Bank's swift execution highlights its resilience, robust financial health, and forward-thinking leadership in Nigeria's evolving financial landscape. After the break, we return with a conversation on the 5% fuel tax that has got Nigerians talking. So we are returning back with a conversation around the fuel tax that was announced some weeks ago. Not really announced, we'll say, in the sense was made known, seeped out into the national conversation some weeks ago. In the Nigerian Tax Act, we noticed that there's a 5% fuel tax, and there's been a lot of conversation. There's also been a lot of uproar. Then Mr. Taiwo Oyeyele, who is the chairman of the Presidential Committee on Tax Reform, he clarified. He basically said, what he said was something like, we didn't create this law, we just adopted it. He noted that the law had been in existence since 2007, however not enforced. Basically, on the show this morning, we have Mr. Jed Oyeneye, who is an associate at Northern Templeton Attorneys. Good morning, Jed.
Morning, David, and I'm glad to be here.
So want to have an understanding of what is going on with that particular, the whole thing around the 5% surcharge. So can you help us explain? Let's take it from the legal side, based on that's your forte.
Yeah.
The legal history of the 5% surcharge.
Okay, before I go into the legal history of the surcharge, I would go to actually the economical history.
Okay.
So there's an economist, his name is Richard Musgrave. And you see, Musgrave brought about the concept of hypothecation. So hypothecation is saying you don't necessarily need to put all the taxes in the same pool. Let's have some taxes that are marked for some things.
Okay.
So you see, in the Roman Empire, you had taxes for war. So this is not going to the collective pool. This is going for a particular thing. So you could mark it with what's also used to do. So you can, benchmark the achievement that tax is getting with. You can justify it, and there'll be transparency. Now, coming to the 5% surcharge. The 5% surcharge was in the FEMA Act, that's Federal Road Maintenance Agency Amendment Act in 2007, and the 5% surcharge was there to ensure that we maintain roads. You understand? So basically, if you're a road user, you should maintain the roads. It's part of our commonwealth, and so we should maintain it. And so that's how that surcharge came to be. Yeah.
Okay. So in a recent interview, he spoke about the fact that because there was subsidy, that's Mr. Taiwo Oyedele, he said because there was subsidy, that tax could not be enforced. But now he also spoke about the fact that there were some other taxes that they had to repeal. He was talking about the tax on telecoms. There used to be a 5% tax on telecom services, cybersecurity levy, and all of those taxes that they repealed. Then what do you think is the justification for this one was not repealed? This one was crossed over.
Okay, so they've brought that into the new law. I remember the last time I was here, I was talking about the fact that this NTA, or what I like to call the Big Beautiful Act,
okay,
is a way of saying, we don't want too many laws talking about taxation, and let's put everything together. So they looked at some and said, there's no justification for this anymore because we're collecting it from another way. Okay. All right, but for the maintenance, the road maintenance tax, sort of, I'll just call that 5% road maintenance tax. They said, I think we still need the revenue coming from this place, or revenue that should ideally come from here. So that's the reason why they have brought it into the NTA. And so they're hoping that the NTA comes into enforcement or comes into force by January 1st, 2026. Now, justification, of course, is that the government is not making enough money to maintain roads. And so if you are using a road, or if you are applying a particular route, you should be somewhat responsible for maintaining it. You understand?
So do you have any idea of how many countries in the world probably implement this kind of tax?
So the first issue I usually have when politicians and policymakers come up with something and then say, no, they do it in America, or they do it in the UK, is that this is not UK, this is not America. It is not, Britons are not the ones paying this tax. It's not Americans that are paying this tax. This tax is being paid by us. Of course, many countries have it. In fact, some countries have as much as 15%, 16%. That kind of surcharge, that particular surcharge meant for road maintenance. There are a lot of countries that have it. But you see, I don't want us to divert to say, there are some countries that do it. It doesn't matter what country does it. Is it favorable for us here in Nigeria? The people that are going to pay these taxes, would they be able to cough it out without sweating? And another thing I would like to mention is that because this tax is deducted at source, whether it is the fuel you use for your generator or the fuel you use for your car, the tax doesn't know the difference. And so that's my big problem with this particular tax.
Okay, so basically, like you said, it's deducted at source.
Yeah.
One question that comes to mind is the fact that if people stop using fuel, let's say, okay, we have this shift to, does it affect CNG?
Yeah, it does affect CNG. Fossil fuels, basically.
Fossil fuel?
Yes.
Oh my God.
But it wouldn't affect EVs.
Okay, under what condition? What condition do you think they would enforce this surcharge?
So I still feel the surcharge should not be enforced just yet. Because one thing is, the reason why people are paying taxes is because you feel, it's comfortable. We mentioned the fact that there has to be equity in payment of taxes. There's already more than enough burden on taxpayers. Then by the time you now bring another 5% for a fuel regime of petrol regime that is not even stable yet, tomorrow prices can go to as much as 1,000 naira. So imagine that you can't even peg it. You don't know exactly the amount that you're going to be getting from it. So that's the issue. I think one of the condition where this tax can be easily applied or applicable is when things have eased out a little bit or eased out some more. You understand? Where probably fuel has probably dropped or something like that.
Or inflation
goes down. You understand? So
we're still in the 20% region,
and it's too much.
The question I want to have is, what do you estimate are going to be the ripple effects on consumers?
So we are a petrol-centric economy. 75% of people, especially in Lagos and even generally around Nigeria, depend on public transport You understand? So by people, I'm talking about businesses, I'm talking about civilians, I'm talking about everybody. So a 5% increase in cost of fuel, and because petrol, of course, it's an inelastic demand. No matter how you push it, nothing is going to happen. You understand? It's an elastic kind of demand. No matter how much you do it, people would always buy. So the thing is, people will just push the burden to the next person. So for example, if you're buying fuel at maybe, let's imagine it was 900, now it's going to be 945. So that 45 naira, you're going to push it to another person.
Push it to the people who are going to board
the buses. Even for people that transport, dispatch riders, the boats and likes of this world, they would actually have to push that burden back to the final consumers. That's myself and yourself. So I feel like the ripple effect will be very, very grave.
Okay. So before we go on, I want us to look into this Dangote Refinery versus NUPENG issue. So before we go on, I'll quickly read something in the second page of the BusinessDay newspaper for today. There was the Dangote Refinery responded to allegations by NUPENG, and I'm going to be reading some of those. I'm going to be reading some of the allegations, some of what they said. So they say Dangote Petroleum Refinery maintains a cordial and cooperative relationship with all recognized trade unions, including NUPENG. They say we have consistently supported their legitimate activities within our facilities, including providing office space and enabling member engagement and dues collection. This is not even the part of the report that I wanted to read. I wanted to read the part where they were talking about they went full ballistics. They said they fully uphold the constitutional and international principles that trade union membership is a voluntary right. We neither interfere with nor restrict employees from associating with legally recognized trade unions. Assertions that drivers are compelled to waive union rights are categorically false. This current industrial matter is an internal dispute with NUPENG, specifically involving their petrol tanker drivers unit. Okay, let me stop there. Basically, what's your understanding of the entire matter? So the Dangote Refinery, NUPENG, then we bring in petroleum tanker drivers. Like, where does this start? Where did the issue start from?
So this impasse is, as I call it, impasse is as a result of NUPENG coming online and saying, oh, Dangote is saying that we don't want people or their drivers to unionize. That's from these 4,000 CNG trucks that they're going to be rolling out. I even heard this morning that on the 15th, that'll be on Monday, they're going to start a phase of that rollout. Of course, very, very applaudable initiative by Dangote to bring down fuel and all like that. But NUPENG is saying, no, you can't say that our members or you can't say drivers cannot unionize and join us. But Dangote is here saying, we didn't say that. You understand? So at this point, what we want to see is that where is that clause inside or probably is there an MOU they signed, or is it inside an employment contract that says they can't unionize? But quickly, I would like to mention as a principle, I like talking about principles because everything is woven around principles. Yes. So Ronald, there's this book by Ronald Coase. And Ronald Coase says that why do people not allow the market to determine everything that happens? The name of the book is The Reason for the Firm or something like that. Now, the reason why we have a firm is that there are some economies that don't favor an organization. So if I'm saying, will I allow NUPENG to determine everything that, or maybe trade union that to determine everything that happens within my organization? No, it's not going to favor me. So probably I might advise my drivers don't join NUPENG because probably they have too much issues. Why not join direct truckers instead?
But do you think there's, if say, let's say, Dangote advises, like you said,
it's fully within his rights.
It's fully within his rights.
The company is fully within their right to advise, because it's just like you're a member of a church and somebody comes to evangelize. They are not doing anything wrong by evangelizing to you.
So now Dangote is going to have, I'm going to put it this way, Dangote is going to have 4,000 truck drivers. At least. Yeah. And let's not even talk about the truck boys. So in average, you probably have like maybe 8,000.
I'm talking about 12 or 16,000
new jobs created by, and What NUPENG is probably advocating for is the fact that there must be an absolute right for these people to unionize. And Dangote says, according to what the Ministry of Labor, the resolution reached with the Ministry of Labor, they are saying that they do not stop them from unionizing, but it's a choice.
Absolutely.
It's a choice.
Absolutely.
So the question I want to have is that, does it not have any legal implication? Are they not supposed to, if say of the probably 12 to 16,000 new jobs, let's say just 1,000 of them decide to unionize, and they are maybe they are taken on by the company, are there regulations in the law to prevent such occurrences, let's say victimization or harassment, or let's say workplace bullying, because they decided to unionize against the advice of their company?
Of course, on paper it sounds very, very cool, right? So you can join whatever union you like.
Yes.
But when you get into the office, they're like, NUPENG boys, well done. That kind of a thing. So it's a common thing for especially big organizations to advise their members, don't join this union. And then maybe they start to face some issues. That's the members that work contrary to the advice. They start to face some issues in-house. But the constitutional rights, Section 40 says that everybody has freedom of association.
Okay.
You understand? That's even it. Then even the Labor Act itself, Section 9, subsection 6, also says oppose the right of members to unionize and join or meet together for collective action. Even the International Labour Organization standards, that's even the Constitution refers to it or alludes to it. We have Section 97 and 8 and 86. 98 and 87, standards 98 and 87. So you have every right as a member of a company or a staff of a company to unionize. But the issue is, no matter how much rights you have, it will be whether you can enforce that right. Now, the process of enforcing the rights is the problem. Everybody has rights. But where we are in Nigeria, yes. So
they say freedom of speech, no freedom of the
freedom
from the consequences, no freedom after speech.
You understand? So that's the issue we have. But I really believe that Dangote and they'll be properly advised and act properly. You understand?
Within the context of the law.
Within the context of the law. But one issue I usually have with big unions, I would mention it's the NBA, NUPENG, we have also NURTW, is that they make it very, very hard for people that are not their members to thrive. For example, if you ride Okada, you are not a member of, you don't buy their sticker, you can't even do it.
You can't even do it.
MBA, if you are not a member of MBA as a lawyer, you cannot get a seal. I don't even know whether you can practice at this point, because you don't get a seal, you can't practice. You understand? So we have issues like that where we have large unions that stifle competition, or unions that are coming and say, which we want to unionize. Say, no way, you can't unionize. Even I can, and all those ones like that. So the issue here is the fact that these rights are in the Constitution, these rights are there, but the enforcement of these rights are the issues that we have.
Now, you said something that wants to lead me into a part of the response that Dangote gave to NUPENG. They went ballistics on NUPENG in this response. On the matter of monopoly, so NUPENG is also raising concerns about monopoly and market dominance.
Yeah.
And Dangote went for the jugular on this matter. They says Dangote Petroleum Refinery operates within a deregulated market framework under the oversight of the NNDPRA. Assertion of monopolistic intent are both legally and factually incorrect. That's first part. Then they said all major industry stakeholders are kindly invited to the records at the licensing office for crude oil refineries in Nigeria. Over 30 licenses were issued, but many of these license holders have invested in building a refinery. Then he mentions names. BUA is building their own refinery, and other smaller refineries are in operations or being completed, such as Aradel, Walter, Smith, and Edo Refinery. NMDPRA is fully aware that issues such as monopoly does not arise nor exist in the market space today. While we are a major industry player, our presence has revitalized the downstream sector, reopened previously dormant petrol stations, and restored investor confidence. Then he goes on in another paragraph. They say it is on record that our crude oil refinery brought down the AGO price, that's diesel, in the last 1 year by over 30% and has stabilized our energy supplies and security in Nigeria and West African region. In comparative terms, gasoline is cheaper in Nigeria today than in Saudi Arabia, the dominantly endowed oil producer in the world, and 40% cheaper than our neighbors. In another paragraph, they said, however, we must begin to ask what has happened to all 4 federal government-owned refineries, Port Harcourt, Warri, and Kaduna. When Port Harcourt and Kaduna were privatized to a consortium, Dangote was a member in 2007. The same NUPENG were amongst the town criers against the privatization. Till date, about $18 billion has been wasted to rehabilitate the refineries without any success. Who are the people who spent all this humongous amount without any result? Can NUPENG assist Nigerians to unravel this? That's ballistics.
if there's a word greater or graver than that, you understand.
So what do you think? What's your thought on this?
Well,
that concern of monopoly and this response to NUPENG's concern.
In Latin, we say res ipsa loquitur, which means this fact speaks for itself. Dangote, or the response that Dangote has given, basically is just the obvious. That's the question. If you're really concerned about monopoly, if you're really concerned about misappropriation, if you're really concerned about consumers, why not talk about those ones? Why is it that it's now that I'm trying to put things in place? Oh, I got a facility to get 10,000 trucks. That facility is on me, not on you. And now I'm trying to make it work. And then you're talking about monopoly. Now, I feel like even having a strike is not even the solution to monopoly. There are bodies. There's the FCCPC, that's the Federal Competition and Consumer Protection Commission that was established by FCCPA. And there are other ways you can do this. If you feel like, oh, Dangote is forming a kind of monopoly and you don't like it, why not just apply to them? Why not apply to the courts? Why stifle growth? Why stifle the economy? Because you are trying to say, we're trying to protect people. In the end, you realize, of course, don't quote me, but it looks to me like NUPENG is just fighting for themselves. They're just trying to fight for themselves, and not that that they really care about people. Because if you care about people, you know a strike is going to practically wound people. I'm not even saying wound as in emotionally. I'm talking about physically. You know how many times people fight at filling stations because NUPENG says, all right, we're going on strikes.
Yes, filling stations just close.
You understand? Filling stations will close, or even the ones that are selling, people will queue for morning till night to get those kind of things. I think we should leave this olden days style of fighting and let's be more creative about the ways we fight. Especially, I'm talking about NUPENG and other organizations that are allied with them, Pengasan and Co. Leave those olden days style of fighting. Oh, you know, because you are the largest organization, you want to. In my view, they themselves are trying to even monopolize.
They're trying to monopolize
that sector themselves.
One question that always comes up in my head is, okay, this is just Dangote. We say BUA is coming up with a 350,000. So Dangote is probably providing the template for BUA to follow.
Yeah.
And if BUA does, then let's say Aradel is on 10,000. Aradel wants to upgrade to 50,000 and start producing PMS.
Yes.
That's petrol.
Yeah.
There's Edo Refinery. There is Walter Smith. Then there's also a new one being built in Abia State. So basically, modular refineries. What if all of these guys now adopt the Dangote model and say, okay, Dangote can do 4,000 trucks. I'm a 10,000 barrels per day. I can do 200 trucks. And I can supply all of Imo State. So does that not like break down whatever NUPENG becomes?
Of course it does now. And that's what they're guiding against. You know, Dangote, you are the front runner, right? Let's break you, right?
Or petroleum tanker drivers union.
Yeah, right? let's break you so that by the time other people want to try this thing, they'll first come to NUPENG to, say, NUPENG, we're trying to do something. Can you help us? Then nothing. Okay, yeah, this is what we're going to do. You understand? When you're comfortable up there, you are trying to fight against innovation. That's one thing. And another thing I know about Nigerian economy is gatekeeping. You don't want any other person to come in. Because the problem that NUPENG is shouting about is the fact that you don't want them to join our union. For me, I think that's a personal issue, not an issue that involves you now striking and basically downing or crippling the entire economy. An economy that is almost 100% dependent on petrol. So that's my view on that.
So my own final question: what do we have any? So now, are there any regulatory frameworks to prevent a monopoly in this case of Dangote?
Of course, yeah. You see, we say something as lawyers. There are 1,001 laws. There are many things in place. The PIA itself has established the Nigerian Mid and Downstream Petroleum Regulation Authority. There are other agencies as well. Because one way, we see Dangote is trying to, if I'm just saying that, Dangote is trying to become a monopoly, I mean, no problem. Then we seize their license, or we probably do something about their license because it's regulated. The industry where Dangote plays is very regulated, very, very strict. And of course, a lot of competition is coming in. But you see, if you feel like there's an issue, the PIA already set that in place. I mentioned the FCCP earlier. And there are courts. There's a federal high court. There's a national industrial court, for that issue. But you see, the federal high court, and there are many, many ways that you can rein in. But, as I said, laws are laws on paper. But if you want to implement them and enforce them, Dangote is a power that be, or a power that is. With the power that be, allow you to fight a power that is. You understand? But I really believe that with the new guys that are coming in and are like, let's do this. I think I can do this. I think we can do this. It's at the end of the day, finally, we would say the dividends of democracy, the dividends of the country, finally coming to the Musa on the road, or the Ajia selling something beside the road. So that's
probably a democratization of access to petrol.
Finally, since 1956 at Oloibiri, finally we have something that finally benefits everyone that works on the soil of Nigeria.
Thank you so much for your time, Jed Oyeneye. Thank you so much for sticking with us. It's been a pleasure talking to you on this issue. That's all we can take today on Economy and Markets. Thank you for sticking with us. I'm David Olujinmi.